Yo, what's up, my people? This Jay again, guys. This is a Nasdaq that we did the last time. If you followed up, the last video that I uploaded on my YouTube, then you understand what I'm talking about. So as we said that we were buying this, and there was nothing could stop us from buying Nasdaq. I think I've explained everything that you wanted to know before we goes up. As you can see, what we did was right. After Nasdaq gives us all of this break and gives this also check from here, then this was enough for us to confirm that this was a strong support ever. you know After these were pushed up, then you can see that Nasdaq went up, and this is where we took it from. So it's not clear because we are on their time frame, so it's not easy to see everything that we want to see here. But if we can jump, let's go probably to 1 hour time frame. You will see everything that you want to see. So here is where we confirmed our direction from. After this level being retested or being tried 3 times, for the first time, then price just went down straight and rejected. When it went up and comes back, you can see where it stopped from. So which means that this was another support that price created there, of showing us that sellers have no power to break down anymore. And if you can see with our mobile strategy, this was our downtrend that we're laying on, and you always know that this level stands for oversold. Once it's touched here and come back, now we know that it's time to fly up with the any pair that you can be trading with this strategy. So now let's just check 30 minutes, what 30 minutes says about this. If we come from above, you can see this break line. This break line says it all. And this 200 moving average, you can see after passing below, crossing below the chart, this confirms also that there's no longer a downtrend there. And as you can see, this has given us a double bottom. I hope you understand this. So once it gives you a double bottom, this is clear. You can see these guys and manage to go back up. Then this level means something to us, means entry point if you have been following my strategy. And down here also we have this cross, which is this blue moving average have comes back and breaks level 20. So I'm not gonna explain everything about this because I've been explaining this. Everyone knows what it means. So it was our clean time to look for our entry as soon as possible. That's why we went to 15 minutes 15 minutes to see what 15 minutes was showing. Now 15 minutes showed us this as supporter. It also gives us this as supporter, and it gives us this at the end. Here we are. So once price comes back here, there's nothing we could confirm. When it went up, then it breaks level 200 moving average. This moving average is and it went up. After going up, this is where our first TP was, and it comes here obvious. After entering course, remember we entered from somewhere here, then price comes back. After coming back down, it didn't manage to break previous, and it went up again. After going back up, then it stopped from here and settled weak resistance, then it comes back. I want you to put your eyes on this zone, that I will draw. I did draw here. Then it comes back to test previous. This is a previous one. This one, it didn't manage to break down and come to touch this. See where it settled another support. After setting this support, it went up, and then from here it comes back to the test previous one. This is where it settled. It's a supporter. So which means those previous two was to confirm that the first supporter is strongest ever. No one can break it. Then after this, it went up and managed to touch our first TP. Our first TP, I think, which is this, and it breaks there and goes to our second TP. Now here we are. What do you think, guys? I'm always saying that Forex is not for weak people. If you know you have a strong heart, then you need to stay in this industry. But if you think you have a weak or soft heart, you need to look for something else to do. Because imagine seeing your money being drawn down. Just imagine you have, like, let's say you have bought from somewhere here. Sometimes market tricks you. You have bought from somewhere here. It went up for a little bit, then it comes back down, and you know that your stop loss is here, then you see it from here going into minus. Once it goes back, then you can see that we have profit. Once it reached here, then check what happened from here to this level. How much do you think you will be into minus with? Which means if you have small account and you didn't apply risk management, proper risk management, your account can be wiped out. But if you have enough or stable capital and you see this goes into minus, you don't check. If you are a trader who had a strong heart, as I said, you don't check, because you know that you confirm the direction and your entry is correct. Whatever that they will do here, price will go back and go to your direction. That's why I'm always saying that you need to have a strong heart, and you need to also always apply a proper risk management, because it helps. And another thing you need always to expect is, because market makers knows obvious, if you took your entry from here, they know that your stop loss isn't far from there. It might be somewhere around here, because most of traders doesn't want to lose. That's the reality. It's not me who said so. That's how it is. That's why they make sure they put stop loss closer to the entry point, by saying, at least if I can lose, I can lose few more pips instead of losing my whole account. But mistakes happens once you are applying your lot sizes. If you have, like, let's say you have $100 and you want to trade with 0, let's say, comma 30, and then you need to just push so many positions as much as you can, and then you think stop loss is gonna help you anything. No, stop loss won't help you anything, because even if stop loss can't be touched, just pull back can just take you out. Sometimes pullback can just go and throw you out, and then after that it will just go back to its original direction. So stop loss can't help you if you don't know to use a proper risk management. First, you need to know what you are doing. You need to know how much is your capital. Let's say that you have $100, right? Then if you have $100, you need to know how much you are going to risk. Let's say you're going to risk 30% of your account, 3% of your account, which means you are risking $30. So now you need to calculate, after risking $30, how much you are looking for. How much are you looking for? Since you have $100, if you are a beginner, let's say you need 2% of your account. Let's say you're looking for $20 or 30. So if you are looking for $30 as a profit, now you need to calculate how much you may lose if price goes against you. All of these must be calculated well before you jump in and press a trade. So if you know how to calculate these three things: how much you have, how much you are looking for, and how much you are risking, and how much you may lose, is four things. How much you may lose if the trades goes against you, in order for you to know how much you're gonna be left with. So this will always help you guys. Don't lay on stop loss, because stop loss sometimes it doesn't get touched, but lack of risk management gets you out. These are the things that you need to learn about. So like it happened here, it happened here as we're talking. If this was our confirmation support that price is gonna go wherever we want, then check after breaking here. This is what I said: when it comes back, imagine you have taken your entry from here. After taking your entry from there, you can see this rejection. So what if your stop loss was somewhere here before? Because it's where it stopped from and goes up. Then you say, I put my stop loss to this last candle. Then you just enter. Within a few minutes, here's the spike. Then spike touches your stop loss. Then you are out. But if you just okay, let's say second thing, let's say your stop loss is here, right? And then you took your entries from here without risk management. Do you think this spike, even if it didn't touch it here, didn't touch here, do you think this spike will leave you peaceful? The answer is no. This spike will take you out because of a lack of risk management. Then if you just use the proper risk management, there's a possibility of being saved from this spike. Then price will go back. It is on its original direction. And you can see also, once it reached here, it did the same thing. It comes back to same level, because market makers knows that also after traders seeing this confirmation, a second confirmation of going up, obvious they took an entry. And after taking entry, they know that most of traders doesn't want to lose. That's why they put a stop loss closer to the entry. And then second stop loss hunting comes. You can see it was even longer than the first one. Then from there, after taking out your stop losses, then price went up. You can see price went up. That's why most of time when I confirmed a direction, when I'm sure about with direction, I don't use stop loss, because I know that anytime stop loss handle can come in from nowhere before price goes to its original direction. So my people, this is a few of information that I would like to share, so it can be helping you whenever you are trading. You may use these informations for you to secure your account. So let me just end this video here, and if you have a question, then you will have to ask me through, I will leave my Telegram link there in the description below, so you can reach me easily. So enjoy your day. Jay loves you all.